that Joe's often said, incentives are the prime factor regarding miners staying in the ecosystem. Does Ergo price have to appreciate to a certain percent with EAP 27 happening to sustain miner engagement? So, and of course, Joe, since this was said by you, I'm sure you got a lot of input on this. I think that we actually covered parts of this question in a couple of previous AMAs. And so, yes, there has to be some price appreciation for some. Okay, so again, it depends on the circumstances of each individual miner or mining operation. Basically, all these are businesses. If you want to look at it from just straight capitalistic perspective, and so what makes sense, right? So on profit. However, that's just a part of the big picture. Some, and hopefully more than a few miners that are now coming into the Ergo ecosystem are coming in because they understand the long-term perspective, the long-term opportunity that exists with Ergo and where Ergo is heading, and that they're still early. And so basically, and like it happens in bear markets, and I believe this is something that Joe said, the investment now is in a way speculative, right? So they are right now coming into the ecosystem. They might not be making a huge profit, but they're investing in the ecosystem because they believe that it has the potential to explode, and it does. So to me, I think and I'm sure to others as well, it's a combination of these things. It's not a kind of a blanket, and there's no blanket answer for this question. But I don't think that, because some people really concentrate on price, say, oh, well, Ergo is really, really undervalued. And so if these miners come in, the profitability is going to go down, and then they're going to leave, and what's going to happen? I mean, there is a chance of that happening, but I really think that we're strong enough to sustain an influx of miners that will come here because they understand what Ergo is about, and not just for straight, dollars and cents profit margin type of thinking. So that's where I'm at with this. What do you think, Joe?
All right, that's a good question. I appreciate it, Ergo Menno. First thing you have to say is, the incentive for proof of work is profit driven, right? That's kind of the game for mining. Now we are in no other way to put it, we're in a shitty situation post ETH as a proof of work, ecosystem, as a whole, right? It's not just Ergo, it's just the amount of capacity out there the market has not adapted to. And so, you have the net token generation from proof of work, right? That's something that miners do ultimately really influence price long term. You can look at the Pule multiple in Bitcoin. That's a good example. One thing that Ergo, as like the foundation, does is we don't do a lot of heavy market making, because miners need the ability to adapt pricing on market. So they have a greater ability to move that. Now we need to expand markets too in order to give them the opportunity to sell, kind of create easy off ramps. That's not something that we've fully developed yet. But then you have another question, and that has to do with additional revenue streams, right? One thing that I've always appreciated about miners is that they're incredibly creative in terms of creating revenue streams and really hunting for ways to be profitable. Now, Ergo does offer some potential alternatives beyond just token generation, one of which is subpooling. Those of you that are new, we have a mining pool out there called GitBlock.io, which is the crypto space's first smart pool. And what smart pooling allows is it creates transparency on chain, and it also creates some really unique opportunities to mine native assets, right? And so you have the ability to kind of provide tokens beyond just the base block reward, where you can mine actual projects on chain. I think that as a potential path for additional revenue, additional tokens is going to be very important to Ergo's future as our block rewards decrease. And then you also have the programmability aspect of Ergo, where you can essentially generate tokens using proof of work. You move into a ecosystem with smart contracts, with potential mechanisms of investment and additional return. And that kind of opens the door to creating additional value or ROI on top of your additional or your base input costs, right? So as the ecosystem develops, I think that we will see more and more potential ways to get a return on the tokens that are mined, or coins that are mined, excuse me. Now, one thing you have to do is manage risk, right? Oftentimes returns do come with some speculative nature or risk attached to it, something to understand. But I can look at the last bear market, right? This isn't the first time that home miners have been on the ropes, so to speak. The last time around, 2018, 2019, miners did an amazing job in terms of mining into Ethereum, investing in the ecosystem, bootstrapping DeFi, the use of DAI. So if there's an opportunity there, miners are going to be smart enough to figure that out and use it. And the reality is it may need to be internal as we work to improve market access, right? So those of you that are willing to stick it with us through kind of the rough times ahead with, markets in the macro aren't that great. Economic policy in the macro isn't that great. But development on top of Ergo actually is pretty great in terms of how the ecosystem is growing, expanding, providing potential paths for additional revenue. So those of you out there that are willing to stick with us, I would hope that you can interact within the community and, offset some of the carrying costs and difficulty that the macro environment, high electricity prices, and an oversupply of mining capacity, is creating. But that's going to be a rough time, and to some degree, I'm not somebody that's going to sit here and say, everything is great, rainbows and unicorns, right? The reality is the macro has some issues. Ergo as an ecosystem needs to grow and scale to provide the right off ramps, and also we have, at least at this point, difficulties going to rise at some point. Blocks are going to slow down. So I hope people, can stay with us. I know that everybody has input costs and proof of work, and we may have a portion of people that just are not profitable. They need to basically hop offline for a little bit. But I think over time we will adapt. Proof of work has shown to be pretty resilient and self-healing. And once again, please distribute that hash rate, support our little pools. There's a lot of great actors out there that are running the network that would love to have your support.
Yeah, absolutely. Decentralization is key. Distributing hash rate is important. And what you mentioned before, Joe, about building on Ergo, that is crucial. So of course, the mining side of Ergo is amazing. A lot of innovation going on there, a lot of governance incentives and things like that happening there. But from the other side, what also drives value, and so what we need to do is, as we were discussing a second ago, not a lot, but a good portion of the incentives has to do with profit. Profit is made from the price of the asset being mined, obviously. And how does that price go up? I mean, yeah, it could go up with hash rate. It could go up with just basically network expansion, but really a sustainable expansion happens when there are real world use cases on top of the network. And it's crucial for us to create more and more and more real world use cases that utilize the network. Okay. That product is being built on the network is being utilized for real world transactions. Because that's really the only way to build up value, is to create real world transactions, real world use cases. Mass adoption, yes, I know everybody wants mass adoption, but really, what I keep saying about this is that you don't have to know what's under the hood. You just have to know that it works. And that is how we're going to get mass adoption. And so a lot of these use cases don't need to rely on really all this knowledge that we have about mining, about incentives for miners, again, which are very, very important. Don't let what I'm saying kind of make it sound like these things are more important. They're both equally as important. But real world use cases will have just as much impact on the value of the ecosystem as the technical side of the ecosystem. And we really need to focus on that. And so we really need to bring more. In fact, I believe that the way you really expand the network is it has to be disproportionate. There has to be a lot more people utilizing the network that don't really know much about the tech. They just know that it works, versus people are really tech savvy and really are into the tech and into actually building. So there has to be more users than builders, essentially. That's what we need to strive for. That's what's going to kick up the value. That's what's going to kick up the price. And I don't like to talk about price, but bottom line is, if people are using it, there's value in it. If there's value in it, price goes up, period.